Welcome to Mo's Market Pulse. I'm your host, Sarah Mokram, founder of Mo Digital Solutions, where we help businesses hit their revenue goals and thrive. On this podcast, we get to connect with industry leaders to gain real insights. And today, we are joined by someone who has gone from shoveling cow manure as a teenager to helping scale high-growth B2B companies. Marc Pickren, founder of Springbolt Group. Welcome, and thank you so much for joining us today.
Hey, Sarah, it's great to see you again.
So today we have a great topic. We get to talk with Marc about how regulation crowdfunding, Reg CF, is shifting the balance of power from banks and VCs to everyday investors and why this matters for founders in 2026. But before we dive into that topic, Marc, for those who don't know you yet, can you share a bit of your story and how it led to the launch of Springbolt?
Yeah, that's a little bit of a loaded question. I'm a Gen Xer. I won't give my age away, but I've been in business for about 25 years. And one of the things that it constantly comes up is the fact that in my career, I've been through 5 recessionary periods. So that gives you a lot of context for folks that are coming into business during different cycles. They may have come into business pre-COVID, then experienced COVID. And then, now it's like the new normal again. And so my background really is oftentimes investors that I've worked with, institutional investors have said, I don't know if it's been passive aggressive in their comment, but they say that I am a non-classically trained CEO. And so my experience started out in sales and business development and in the advertising agency business, and was able to work my way into a managing director of a practice, and then parlayed that into being a managing director at J. Walter Thompson, or a partner at J. Walter Thompson, one of the oldest and the largest advertising agency at its time in the United States. And from there, I have just done what I call entrepreneur endeavors, which was basically I would come up with a business concept, but having a new family, I wasn't quite ready to go out on my own. And so therefore, I would approach established businesses and look to establish an entrepreneurial venture within the confines of their business, giving me that financial support, not necessarily from a dollar perspective, but having FP&A, accounting, and some level of operations, as well as introductions to potential clients. And that culminated in, at one point, merging the company into a public company. And we were the fastest growing public company in 2010. From there, I hadn't ever really, for quite some time, been actively involved in kind of a big corporation. And so I worked in a couple of different instances, one in e-commerce, where we were selling $1.2 billion a year online of gold and silver. And that was a wild experience. I became somewhat of a gold and silver expert, numismatics. And then from there, have done executed some entrepreneurial ventures, but then worked for Mr. Cooper, who at the time was known as Nation Star, and they were just acquired for $9 billion from Rocket earlier or last year. From there, I went back into and became a CEO and started this 10-year journey of really being a turnaround CEO, typically for companies between 15 and $50 million. And probably one of my best known engagements was as CEO of Outbound Engine, which we started as a wind down, 24 million annual recurring revenue, losing 50% of our customers each year, CLTV to CAC of like 1.9 to 1. And 3.5 years later, we sold it for a 9-figure sum after turning it around and having top quartile unit economics. And then from there, I've just been hired oftentimes to come in and do a job, usually between 1 and 2 years, to where I come in and work with other companies. So I've worked in FinTech, I've worked in marketing tech. And last February, I was like, hey, I think I'm going to go give it a shot. And so I rallied up my own investment and was able to combine 3 different companies into one. We migrated 3 terabytes of data, all the employees, and we're happy to say that for 24 to 2025 with those companies, we doubled in size. We're profitable. We don't have any debt, and we have a clean cap table. So it's a pretty fun situation to be in. as an entrepreneur again, and being able to, to really help individuals and businesses out there to take advantage of technology and services that have largely, a lot of industries, a lot of lower mid market to small business have been ignored. And so we're really about trying to bring enterprise level technology, enterprise level solutions, but do so in a way that they're not just left to die on the vine with those companies and not experience full access. So it's kind of about democratization of access to what works. And we take a lot of pride in really helping entrepreneurs who, you know, whether you're a professional within an organization or you're an entrepreneur, you wake up in the morning with a pit in your stomach as to how you're going to make it. And we just want to be there and be that helpful guy.
Nice. So you guys are able to bring all of this experience and expertise and really help these smaller, mid-sized companies get that access and expert knowledge.
Yeah, and it's a common misnomer, or it's conventional wisdom is that SMB is the American Express commercial with the flower shop. And certainly there are a lot of SMBs in terms of like retail flower shops, but the Department of Commerce and JP Morgan did a report where they classify small to medium businesses or small to medium enterprises, if you're in Europe, as anybody that generates from $0 to $40 million in revenue. Most people think small business, and then 83% of small businesses out there are classified as what is called a micro business, which is those businesses that typically don't carry W-2 employees. So they're kind of, startups that have contractors or have resources that they use. And so, at Outbound Engine, we had 10,000 of those micro businesses, but we really focus on real brands, businesses, and agencies that are, probably, post maybe $2 or $3 million in annual recurring revenue. But we also work with a lot of subsidiary companies and large enterprises that may have a $250 million business sitting inside of a multi-billion-dollar business, but the people that run those companies are literally entrepreneurs within those organizations. And so we focus on helping them as well.
That's great. Well, thank you for sharing more about you before we dive into this topic that we're going to talk about today. So, you've obviously been around various companies, a lot of different high growth companies for decades now, and have great experience. Where do you see traditional funding models start to break down for most founders?
So there's a lot to unpack in terms of investment. So I believe in 2024 was the highest capital call rates by limited partners on venture capital groups. What that means is that post COVID or during COVID, there was a lot of investment because money was free. So that's a key point. We went through a whole period of time to where it was the free money enterprise. Cost of capital for a startup was, 2%, 2 to 3% in terms of that cash, but also individuals at the limited partners also weren't able to get much of a return on their investment in the stock market or insurance annuities or even just having money in an account because the interest rates were so low. And what's happened is with the rising cost of capital, which if you're a really good company, profitable, have a good client base, have good quality of earnings, you could be paying 16 to 18% on a private debt placement. And then the venture capital groups are dealing with that they've made all of these investments. And now those companies that they invested $5 million in are coming back to them saying, I need more money. I'm out of money. And they're saying, well, your valuation was 30 million. Now we're going to have to reprice you down to 5 or 10 million. So there's just a lot of challenges related to venture capital. And then the other side of it was angel investors started acting like venture capitalists and venture capitalists started acting like private equity. So you had a lot of angel investors that were investing a lot more money in the past, and now they're looking for that return. And it's just a lot of these companies aren't able to deliver it.
Sense. And what I know that you were talking earlier with me about exploring regulation, crowdfunding, or Reg CF for your own company. So, what made you decide to explore this route as your guys' path forward? And also, just kind of backing up a step here for those unfamiliar, how would you explain Reg CF in plain terms?
Yeah, so on kind of so you have like Kickstarter, Republic, these are crowdsourcing platforms, and even like Republic has really morphed a lot more into having actual private equity and venture capital and angel investors coming into the platform. So they're not they are retail, so there are opportunities to raise capital from the retail investor. Then there is the second stage, which is an accredited investor, which means that typically you have an income of $250,000 a year or more and have a net worth of, let's say, $1 million. Then you have kind of that flow from there to institutional investors, which are, venture capital groups and other folks in that area. And what I had seen and experienced myself was that the venture capital folks are really tied up with their current investments and trying to figure out how to make a go of the investments they have. Angel investors are really focused on those, like, I got a great idea but I don't have a business. And so a lot of these platforms have kind of evolved, and there was some changes made in terms of the regulatory environment, to where one of them is that basically you can work with a broker dealer, so a FINRA certified broker dealer, and you can, through two different options. One is you can raise about $1.2 million directly from the retail investor. So think of, like, if we were able to going on Robinhood and having your stock listed and people being able to buy shares directly from you. So that's what the broker dealer does. It sets up a transfer agent. And then if you have reviewed financials, you're able to raise 1.2 million. And if you have audited financials, you're able to raise up to $5 million. And the beautiful thing about that is that you're selling shares directly to the public. And at the same point, they become shareholders in your company, but that cash is immediately available for the business. So if $30,000 comes in one week, that money is immediately on your balance sheet and you're able to put that to work in terms of growing the business or whatever your thesis was in terms of raising the money. And it's really exciting. So I just was like, I talked to a lot of venture capital friends and my VC bros, and I was talking about this, and they're all like, "Oh, wow, that sounds really interesting, but it's almost threatening because you don't have to give away substantial amounts of equity or ownership in your company to be able to raise capital through a Reg CF. And it's all handled very above board. These are all registered broker dealers. They're very skilled at this. And the beautiful part too is the marketing's pretty fun because you get to basically create what I call a hype page. You get to basically put your IPO out into the market. You get to talk about your company. You get to engage with investors in communication, and you get to provide access to those folks to be a part of your journey as a company. And you remove more or less the middleman or woman, as it is. And so I was just fascinated. And the idea was, hey, if I'm going to potentially someday offer this as a service, so I'm going to help other companies to do it, I should basically be doing it myself. And so we've been on about a 6-month journey, and we hope to launch in March of this year. And it typically gives you, I believe, about a year to raise that 1.2 million. And then you can shift and move into the accredited investor model, which allows you to raise up to 5.
I see. So you start with going for that 1.2, and then if that's raised, you can then become audited and then go to that next tier.
Yep.
Okay. And do you think founders, if they're comparing these two models, do you think they kind of underestimate the long-term cost of the traditional route? Or how do you think they should be looking at this, at these two options?
Totally. I mean, I'm a little bit of a contrarian, and because I have a lot of bruises from my experiences. And oftentimes when I was coming in to turn around a company, that founder oftentimes was either going to retire or was being pushed out by the board and by their investors. And it's a pretty difficult situation. And to be honest with you, and this is going to probably make some enemies of some folks, but hopefully not permanent enemies. But what value do they bring besides a check? And every VC has on their website, look at all these ancillary benefits. We're a long-term investor, et cetera. At the end of the day, a VC is good for a couple of things. One, money. Number two, they're good for if they're really invested in you, making introductions and helping you grow your sales channel, bringing clients to the table, and potential partnerships with other portfolio companies from a strategic kind of basis. Fortunately, many of the VCs, and I give them a lot of credit. Like I had one VC that's on like I don't know 32 boards. They don't even have time to think outside of like getting on a flight and going to that next board meeting. And then they get to the board meeting, they're like, okay, what are we talking about? Like, so I get it, for them. So, I think that the contrarian approach is that, yeah, it's great for some folks and it's still a very viable channel, but it doesn't have to be your only option.
Mhm. And do you think this model gives founders more accountability to their customers rather than just to the boardroom?
Yeah. So on a Reg CF, typically, I think the average raise is around 360 to 600,000, and that's averaged across everybody. Typically, a good portion of those investors are going to be your clients. So I've even seen like regional restaurant holding companies do a Reg CF, and I'm not going to be quoted on this, but they actually offer to their investors a lifetime 20% discount off of their food and beverage bill. So it is really a great way to bridge that gap between a customer and a client that loves your product and loves what you're doing. And at the same point, being able to bring them in for your journey and to make them a part of that and to build that relationship.
And as you've gone through, learning about this and even preparing for your own funding and raising money through this route, what would you say are some big misunderstandings that founders might have when going into the Reg CF route?
Probably underestimating the costs of the auditing and or the financial review. I'm a big fan of, I believe they're a San Francisco based startup called Up Counsel. And it's basically like an Upwork for attorneys, and accounting firms and the like. And so we went to some of the typical accounting firms and finance groups and lawyers to do our review, and we're getting bids from $45,000, and we ended up at 1,800. So that's one thing that you have to be very careful in terms of not getting sucked into something that you're paying a lot more than you have to. But the second thing is really it's a heavy dose of marketing, right? So you a lot of the broker dealers that are doing this offer like a marketing package associated with it, which can be 15 to $20,000 a month in some scenarios. So just making sure that you're not getting, and I'm not saying that they're recommending some different people that have been successful. So I'm not saying that there's anything wrong with them recommending them, but at the same point, underestimating what it's going to cost in terms of getting your message out, and then building that hype page and being able to provide those shares directly to the public. And then I think from my experiences, having been a crowdfunding investor, you really need to pay attention to the fact. I mean, I've invested six figures in companies that literally I invested the money in Republic, let's say. I never even heard a word from them. And then actually I got a letter like a year later that they were bankrupt. And like they never even said welcome to the family. And so I think that founders need to be very cognizant of the fact that if you're going to do this the right way, or at least the way I would do it, or the way we're doing it, you need to really set up that you're going to be having active communications and updates to your investors, just like you would your board, and
Hmm.
that they're deserving of as much information that you can provide, and bringing them in to the arena with you, and making sure that you're in it for the long terms of communicating, because somebody may buy 1,000 shares, $1,000 worth of stock. So you're going to be you're going to have to set up systems to make sure you're able to communicate with them. But if you have 150 investors, you're not going to be able to talk to them one on one about everything that you're doing every single day. So those are the things that I would say are more operational and more kind of brand relationship oriented, relational, that you need to kind of consider.
Yeah, and I guess going along those lines too, just how do you handle that education curve, both for the investors and the founders? So people actually get what this is and take it seriously and know, even for those who might be skeptical, for example, the example you gave where you invested all this money and then heard nothing until they were bankrupt. How do you kind of overcome that and really provide that education to people?
Well, I think that our plan is to set up, basically, you could almost call it a LinkedIn private group, but it's a private social network. So, and there's many platforms available to do this. And so basically setting up almost like a data communication room where those investors can come in, and they can they can, if they want, get to know each other, if they want to publicly reveal who they are. But then you can just be like the one to many, right? You can do one video to where you're doing your update and announcement, and you're inviting them in. And then quarterly, you can do basically like an analyst call for a public company, to where all of the investors come in. I mean, think about like Berkshire Hathaway has people lined out the door, and they do their annual and quarterly updates to their investors. And so that's a similar model that we want to do, but leveraging technology. I don't think that folks are going to want to fly into Austin or Dallas or some location, and if they've only invested $500, but that doesn't mean that they're not as important as somebody. And in often cases, some of that money actually probably means a lot more to them than some of the folks that have large amounts of disposable income.
Then how do you then plan to or would recommend to others to educate though the market even to invest though and to trust this process of, this alternative way of investing and to feel confident in putting their money towards.
I mean, I think it's twofold, right? The Robin Hood kind of model kind of democratized access to, like, you can buy Nvidia shares at 1/100th of a share. I think crypto, I don't ever want to be associated with the crypto bro world, but I think that a lot of that has kind of broken down the stigma associated with, well, I have to go to my Morgan Stanley Fidelity stock person and have them, manage my portfolio. People are really learning that they can do the proper assessment and distribution of funds across different investments in building their portfolio. And then, at the end of the day, I mean, these are FINRA regulated broker dealers. These are the same broker dealers that are doing and backing and being a part of either IPO transactions or follow on post IPO transactions. So, and then I think also, like, look, there's the whole meme stock thing kind of broke down this whole idea of that there is power in numbers of the retail investor. And so, I think that's important. But I mean, these are fully regulated. I mean, this is not you know, a Kickstarter throwing some money in there, although we are doing a Kickstarter with one of my other companies, a Kickstarter type thing. It's the idea that, this is fully regulated. And if I were the company side, I would definitely do your homework, or they can reach out to me on LinkedIn, PM me or whatever the case may be. And I'm probably going to put together a little bit of a video series on, because we interviewed, I gosh, we interviewed like 23 different broker dealers that are active in this space.
Okay, that makes sense, especially with the regulation side of it. That does provide some comfort just right there. So just educating people on that piece alone, I think
I mean,
brings a
there's
lot.
a transfer agent. You own securities. Like
Right.
I don't know how it works, but I used to own a lot of stock in a penny stock. And I called them up and I said, send me out my share certificates. They literally sent me a stack of like 350,000 share certificates with the little stamp on them. So it's the same transfer agents. It's the same system that is applicable across enterprise grade kind of public offerings.
Okay, so I want to talk about the upside. So beyond the capital itself, what's the strategic value in turning, some of these early adopters or customers into shareholders and being involved in that aspect?
Well, if you do it right, think you're going to have thousands of influencers that have voices on social media, that have connections, that have relationships. And now you have kind of an embedded influencer layer for you to be able to, hopefully if you do it the right way and you do it with the right intention and you execute properly, it's a great way to amplify your message as to who your company is. And it's a great way to reward clients that, or customers that have spent money with you in terms of this is an opportunity to have some additional funds invested in that company and knowing that their dollars that they spend with you every month are actually going to increasing the value of those shares as the company increases its valuation.
I'd imagine, similar to what you're saying, this Reg CF, it kind of creates a different kind of loyalty, right? Or brand energies compared to the traditional investor relationship because more people feel they have a stake in it and they're involved. So I could definitely see that. And with the, as you said, the influencers and just people out on social media, if they feel like they're part of this company, then there you go. They have that loyalty and will continue to spread that word.
Yeah, I'd rather have thousands of hardworking, great people and companies, and maybe they have businesses, whatever the case may be, clients that are constantly rooting for my success or my company's our success vis-a-vis the company's success, than potentially having uh, a, a layer of people out there that have, you know, maybe not the best intentions and are just looking to make a quick buck, you know. So I think it kind of in my estimation, it's like it's the power of the people and I say this a lot, the democratization of access to things that people just don't think that they can do it, but it's there,
Yeah,
and giving them that access and cutting out the middleman.
I love that. And I love that view of it and having it be accessible to more people. It's great. So if someone listening is curious but not sure about next steps, what's kind of a low stakes first step they could take to start evaluating this process and see if it makes sense for them?
I would probably say, I hate to say it, I'm not trying to plug, and I certainly don't want to you know, I don't want to overflow and not be able to get back in touch with people. But, I mean, they can PM me on LinkedIn. LinkedIn's fairly safe in terms of the communication. They feel comfortable. You can kind of make sure that everybody feels like the person that they're talking to is, at least from a prima facie level, on the up and up. And they can do a little research on you and et cetera. And so that's one area. But, you know, I, using your favorite AI friend and, Perplexity, and saying, who are the top rated broker dealers that are involved in Reg CF and what is their track record. Uh, there was one site I found that listed like, I think it was about 70 broker dealers. And as I went through and checked every one of their websites, 50% of them weren't in business anymore. I think that the good news is coming in now, there's been a little bit of a bloodletting of the folks that just thought that this was an easy way to make money. And I think that they've been all vetted out. So now it's starting to get to a smaller core of broker dealers that have good success and good track records. And then it becomes the negotiation on the cost. So, you pay typically, I think we're all in about $20,000 over the last 5 or 6 months on just the relationship with the broker dealer. And then they do take a success fee of a certain number of bips and or percentages. So just really making sure that you're negotiating and getting the right deal. And then making sure that you have a real strong comfort level with who you're doing business. And then the second part of it is, which is really probably the most maddening is, or area of risk actually, is just in making sure that you don't lose your shorts on the marketing approach. So creating a pro forma, saying based upon specific types of marketing metrics, we're gonna send 1 million emails a month. We're gonna do X amount in Facebook, conversion ads. We're gonna do this, and this. That's going to lead to this number of people, et cetera. And then saying, okay, that's going to be a cost per the cost of acquisition to an investor. And then, making sure that you evaluate the different types of pricing mechanisms out there. So there's a kind of a consumer facing company. I'm not going to say their name. They've done an incredible job. I think they've raised to date about 37 million through Reg CF. And they're kind of like a honey type product. So it's like get paid for using your phone. So they have these embedded customers that are now investors. But like if you visit their site, it's like buy 1,000 shares at, let's say, $1. And if you buy 10,000 shares at $1, they give a 25% premium on that. So you get $125,000 worth of shares. And so just really evaluating, like, if in my case, our company is at a stage to where I don't want to trigger a valuation of the company because we're only really a year into it. And so as it relates to that, it's making sure that you're pricing things correctly, because at some point we will need to trigger that for a valuation, and this will have really most probably a very strong boost to what that is.
And would you say there are any specific types of businesses or business models that tend to be a better fit for this path, or some that should steer clear, in your opinion?
I think we're a little bit of an outlier because we are uh, both a we are both have e-commerce clients, kind of more of a direct to consumer, smaller businesses type of business. And then we have a lot of large enterprise clients and mid-market clients in the B2B space. So we're probably a little bit interesting because we're not like, we don't have like an embedded base of customers that are like fanatics, that are like, hundreds of thousands of customers that are like, love our product. I mean, I think our clients love our product, but we don't have that. So it's traditionally been more suited to those companies that have very large install bases of customers. And then large could be 10,000, or 5,000 or 2,000. I mean, we have technically, probably about 2,000 on one side. The point is that you can, I think that you have to think through. I don't know that there's a business. I think it's just more on what is the relationship with your customers, and also like how really sure are you in terms of the fact that you're going to continue to increase and be successful in your business. I would feel really bad if anybody watched this and had a company that was on its last leg and needed the money in order to get through the next year, and was potentially going to not be that great at delivering a service to their install base. And that's only going to amplify the negative of that. So, but I think it applies across the board: restaurants, mobile apps, you name it. Like, I mean, if you think about it, the whole GameStop, meme stock, I don't know what you even call that event, was really based upon the retail investor having very strong emotional connection to GameStop as when they were younger, and that GameStop was very important to them, and they knew that the company was in trouble, but they went and invested in it anyways and increased that company. But also there was a significant amount of increase in capital available for those businesses. So I think that I think that there's all different types, but I think that that's um, just make sure you have a good product, you have good clients, and that you're able to, without the money, be able to continue to operate and service those customers at a high level, and that this money can be, or this capital can be utilized to just accelerate that growth.
Right. So instead of this being an option for last ditch effort, it is more to amplify and help you grow and serve your
Unless that
clients.
last ditch effort has your folks, that your install base, your customers are like, no, 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 you can't go out of business. So we're willing to put $50,
Right.
$100, 1,000 into your company because we don't want you to go out of business. And, you know, there's a lot of really great businesses that have just been victimized by not knowing how to navigate raising capital, banking relationships, lines of credit, financing, and venture and or seed investment, to where maybe they've given up a substantial amount of their company. Now they've had to turn to private debt placement, and they're paying 18 to 21% right now, which is just going to accelerate that decline.
Hmm. That makes sense. Well, Mark, this was packed with great insights, and I loved learning all about this. And I know the listeners will definitely find value in this as well. So, thank you so much for sharing with us today. And for those who do want to keep up with you or your company, where is the best place? I know I heard you say LinkedIn. Is that the go to place to connect with you?
Just look up Marc Pickren, Mark with a C. I do have a personal website, markpickren.com. And then by the time this hits, our full rebranding of our the Springbolt group will be happening. And so, they'll be able to visit that site and check us out. And also on LinkedIn we have a company page, and I can be found on YouTube at the real Marc Pickren. That's not me being egotistical. I kind of regret the name at this point, but it was meant to be funny, like the real Marc Pickren, like as if anybody else was trying to be Marc Pickren. And so, you can just kind of Google me and probably find some ways to get in contact with us. So yeah, for sure.
Well, thank you everyone for tuning into Mo's Market Pulse. And thank you again, Mark, for joining us today.
All right, great. It was great seeing you, Sarah. Bye bye.